Okay. Hello, folks. I see everyone's just slowly starting to join in. We're right on time at 9 o'clock. So if you can hear my voice, we're just going to give this a minute or two to let everyone dial in, and we will get ourselves started. Thanks for joining us for yet another Investor Office Hours Q&A. Bear with us one moment as everyone joins in, which looks like it's happening very rapidly. All right, just to repeat, people are still dialing in at a rapid clip. So this is Anthony from Royalty Exchange. How's everybody doing? We're just going to give it another few 30 seconds or so to let everyone complete their dialing in process. It is happening very quickly on my end here, so this is great. I'm glad everyone's on time. We're going to get started in about a little less than a minute, and we'll get rolling. Thank you. Okay, so folks, we're going to get started. How's it going? This is Anthony Bruno with Royalty Exchange. I have on the call here Matt Smith, our CEO. We have Ryan O'Connor. He is our chief financial analyst. I think I'm calling you these days. And we have Rob Bernard, who is our chief counsel. So thanks everyone for being here. So today, this is our fourth office hours Q&A session, but we're going to do something that's slightly different today. What we're going to focus on for the very early part of the session is for Ryan to walk us through a live listing and kind of point out some of the components of the listings that he uses to create valuations for catalogs and whatnot. And this should be helpful for anyone who's looking at royalties as a potential investment opportunity. He's going to kind of walk through where you can find the data, how he kind of analyzes the data, how you might be able to utilize this in your own modeling and so on. And we're going to do that with a live listing that's actually open for bids right now, so you kind of see the real-time process of it all. So we'll do that for about 5 minutes. If you have any questions about what Ryan is actually showing and walking through, please use your Q&A feature at the bottom of the screen there to submit some questions. We'll be able to take a look at those questions first. We'll basically address the questions that you ask about his walkthrough first. And then once we go through those and his Q&A, his demo is over, then we'll get into the questions that you guys left in advance when registering. And of course, at any time after that, if you have questions, you could always enter them in the Q&A feature of the webinar tool. So please feel free to use that. I'll be monitoring and reading those as we go along. So with that, I am going to let Ryan take it away. So Ryan, why don't you show us how you do the walkthrough here of this live listing?
Yep. Awesome. Thank you. And good morning, everyone. And Anthony, just to check, can you guys see my screen here?
We can see your screen just fine. Yes.
Okay, perfect. So we're going to just take a look at the Misfits listing, which is currently up on the site. So just starting off, from our homepage here at royaltyexchange.com, we'll just go ahead and move to our listing section. From there, we can certainly see the open listings, and the Misfits ones are right here. So we'll click on that. All right, so I like to use the royalty page on our website as it's where you gain your interest in the auction. It's going to give you a brief overview, but it's not going to give you everything that you need to know. So we're going to take a look at the raw data as well. So we start here. We see that we have a life of rights listing, current price, current theoretical IRR, bidders, how long's left. As we scroll down towards the overview page, again, more information here, bidding increments, see if it's a dollar amount you're willing to work with, that sort of thing. You got your dollar age right here, which is very important, and our LTM, and then you get some other information publishing, type of royalties included, that sort of thing. If you kind of scroll down a little bit further, you can, read about the key drivers and whatnot, which we'll kind of uncover in the financials. Moving on to the financials tab, again, you can see our raw data file, which we'll touch on in a minute here, but we see that the earnings are in an uptrend, which is certainly great to see. Our how our royalties have earned over the last 12 months. You can kind of see the growth rate here. Breakdown of the sources, top 5 songs, certainly growing at a very, very rapid clip, the top 4 there. And the breakdown of the earnings by those as well. So, looking at this catalog, certainly a high caliber catalog. It's growing, it's a 20-year-old catalog. So let's download the raw data. You can do so just by clicking on this. It will automatically download for you. And I'll switch over to that.
Yeah, well, Ryan's getting that. Let me just say that we feature just a few years of data in each of the listings. And sometimes there's a lot more data than that. We just kind of standardize it for each of the different catalogs. So, but if you want to see the complete data, and you really should be looking at the raw data files in any auction you're bidding on anyway, then that raw data link at the top of the financials is where you want to start. And when you download that, this is what you end up with. Ryan, go ahead.
Great. So this is what the raw data is going to originally look like for you. So a lot here, just, using Microsoft Excel's tools, you can group it and analyze it the way you find most acceptable. I like to use a couple different formats. So first thing I'm going to do is just kind of put it into a pivot table to see, again, what are the overall royalties kind of doing over the history that we have. And we can see here they're certainly growing. In the last 3 years, there was a little bit of a decline here, so we'll kind of uncover what happened there. And kind of how they've done it. Certainly this is high caliber, especially for a 20-year-old catalog. Right here, I just like to see what the kind of the growth rate has been over the last 2 years and how it's kind of compounded. 18%, certainly a great number there. So just a very brief overview shows us that they're in an uptrend. Moving on. Now this is, I find this tab the most important, the source information. Just because it's going to really tell you where the royalties are coming from, right? Obviously, we want to see a lot of streaming royalties. We don't want to see a lot of other, downloads, physicals, right? We don't want to see formats that are in a cyclical, downtrend. So essentially what I did here is we have all of these kind of different sort or sub-source type data. I like to just group all of the streaming ones into into one category, streaming. You'll see I have highlighted here in yellow sync. I just like to check those, make sure they're not earning a big portion of the royalties, which certainly in the last 12 months, very little. Looking at the streaming in particular, we see here that they make up 84% of the last 12 months earnings. That's a great number to see, right? It insulates the catalog from the shift out of other formats into streaming formats. It's certainly growing at a nice clip. It's been increasing the acceleration in growth in the last 3 years, as we can see, which is great. This is a 20-year-old catalog. So certainly they found their niche market, but they're attracting new streamers to their music, which is great to see.
And I think this shows, this catalog actually is a great example of the power of dollar age. And so Ryan has said it a couple of times, especially for a catalog that's this old. To see it growing as an older catalog, this isn't actually that common among music that was really popular 20 years ago. You actually do see, you see catalogs, of artists that did achieve high levels of popularity in streaming, sort of rising along with all other boats along the way. But I think that, the benefit of a catalog that's been earning consistently for 20 years means it's going to benefit from streaming growth in an outsized way. So while all music is essentially benefiting from the fact that streaming growth is growing substantial, that's true, all of them benefit. But the catalogs that are older, that have been around for longer, benefit disproportionately from catalogs that are newer. So, and this is the volatility of the income, obviously, on the downside is dramatically reduced, the older the catalog is as well. Sorry, Ryan, go ahead.
Nope, that's perfect. Yep. Great. And just to kind of give you a quick view of what I grouped in there. So I'm grouping these streaming services I threw in kind of that category, just so you can see where that's coming from. As we mentioned, we did see this decline in 2016. Looking at the source, we can see that it was from this download section here. I'm not too worried about it, right? I mean, it's a format that's going out of style. It looks like it was, I mean, the large drop off was kind of one time, and, you know, it's kind of moderated down. But again, streaming's making up such a large portion of the LTM that it's nothing to worry about. Moving on here, we'll take a quick look at the songs. I mean, this is where we're going to come up with dollar age. We'll go and, you know, date all of these releases, and that's how we'll come up with the dollar age. Just looking at the top 4, we can see they make up 75% of the LTM. I mean, great to analyze these top 4. Again, I like to look at the songs, but not get too involved, right? We're not trying to get attached to the music. We're trying to get, you know, find good financials. These are just the year-over-year growth rates that have happened. And again, as Matt mentioned, this is a 20-year-old catalog, and their top 4 songs, making up 75% of the LTM, are growing, you know, in most cases, double digits, right?
Strong get stronger.
Yep. Exactly. So, you know, really no red flags here. And then the last thing I like to do, and I find this useful, is I just create a risk distribution, is what I call it. But essentially, I take kind of the inputs, and again, everyone, you can kind of model out your own differences however you want to do it. So, I mean, here are my inputs, just my LTM. Let's just say the multiple being paid is 8 times, and you can resell it at 7 times. And again, you know, adjust this to your will. And essentially I set up, what if it were to decline 10% a year, which, I mean, if you look at it, highly unlikely that would happen, but let's just take a look at the scenario. What if it didn't change at all? And what if it grew 10% a year? And I do it out 10 years, and then I have that exit multiple to recapture that terminal value. This is a life of rights listing, so we want to capture all of the value that's left in the catalog after 10 years. And so this is your kind of your IRR distribution. And as you can see, even if it were to decline 10% a year, which again I would see highly unlikely, you're still in the green, right? And that'll kind of just give you a feel for, you know, worst case scenario, best case scenario, that sort of thing.
And the point of having the raw data file is that it just allows you to do your own analysis. This is the way that Ryan looks at it personally. This is I mean, we have a standardized version of this that we present on the website, which is, you can see a lot of those components are present here. But these are some other things that Ryan does just to get a better sense of the catalog himself.
Yep. Great. And so, I mean, that's just a quick overview of how I go ahead and look at these catalogs. As Matt said, again, we incorporate some of it, especially the source information is very important. So I think that's the most important tab, and probably the one takeaway I would say, if you take one thing away, is that source information.
All right, thanks, Ryan. And again, if anyone has any questions, please you know, type them into your Q&A screen, and I'll address them as we go along here. But I want to start off with a quick question.
There's someone has their hand up here.
Someone has a hand up. Let's see. Yeah. Yes, exactly. This is gonna. I'm gonna allow Paul to ask his questions.
Yeah, that'd be great.
Well, actually, he took his hand down.
We'd love to hear your question, Paul.
So we'd love to hear your question. So it might have been, sometimes people just like to play around with the controls a little bit as well. So like I said, I'm happy to answer any questions as we have them. So we do have a question in, but just before we get to it, this is a real important point. Ryan, when you the spreadsheet that you showed us, the raw data tab is the one that we provide. The other tabs that were there that said songs and source and whatnot, those are tabs that you created or are included in that raw data once downloaded.
So great question. And so the raw data is provided. The other ones, I just use Microsoft Excel's pivot table function to create those, right? So you're going to get just that raw data tab, and then you can analyze it any way you see fit. I just use Microsoft, makes it easy since it's coming in that format.
Okay, great. So now here come the questions. First one, what kind of assumptions are you building into the official IRR calculation? It seems like some increase in payment and a 10-year sell price higher than the opening bid.
Well, so yeah, here's what's important about what you're calling the official IRR. We call that the theoretical IRR. I should want to make clear, we don't see that as the official IRR at all. And if you click on, if you can, on the website, actually, could you go back to the listing, Anthony or Ryan, just show that?
Ryan has it up.
Yeah, let's show the tooltips and everything around what it says actually about the theoretical IRR. See, the truth is that all, future-looking IRRs are theoretical. We just explicitly say what should be said with all IRRs, actually. But and that is essentially we're using a very simple model that is universally used across every catalog that's listed, and it's very simplistic, and it's also conservative, but to essentially calculate what the theoretical IRR might be. And Ryan, if you just follow the next link there down to how it's calculated. Oh, yeah, it's just if you scroll on the financial tab. Yep. So this is exactly how it's done. This is done for every catalog in exactly the same way. The individual analysis that Ryan did just real quick on this catalog, we don't even do that much with it. The whole point of the IRR, the theoretical IRR here, is to allow for comparing from one catalog to another. So since you can see the history of all the transactions that have happened, we wanted to be able to make sure that we were, that the standard by which they were all being judged in terms of future cash flow projections was all the same, all mechanical, all very simplistic, and all, frankly, if a catalog is growing, it's definitely conservative. Because what it does is it counts on, in the very first year, our forecasts always show, in the theoretical IRR, that the growth rate shrinks. Always in the first year. Now, if you look at this Misfits catalog, it has been growing, doing really nothing but growing, especially with their streaming. It's unlikely that it's going to start, the growth rate is going to be cut in half next year, going to be cut substantially next year. But essentially, the model builds in a pretty substantial decay rate to make it, again, a little bit more conservative than if an individual analysis might produce. That's why it's really important to do it on your own for all of these. Figure out what works, even using the simplistic version that Ryan did, where a negative 10% growth, zero growth, and positive 10% growth, what's the outcome? That simple analysis is pretty useful for giving you a perspective on the range of possibilities.
Yeah, and just to elaborate, all it does, it takes the past 3 years, right, and extrapolates them into the future. So
great.
Based upon a standard high decay model.
Right. And I just wanted, there's another question related to the IRR that I'm going to read. I think you guys addressed it, but I'm going to read it just in case there's anything else you want to bring up, which says here, the IRR you calculate is based on extrapolating the historic growth rate over the last 3 years. Is this correct?
Yep.
Correct. Yep. And I guess one other thing is he did mention the terminal value in that first question. That is just a 5 times resale of that last year cash flow. That's all that terminal value is.
So
again, it's very conservative.
So it takes that last year cash flow, and then assuming you're selling the catalog at 5x, at a 5x multiple of the last year cash flow, not at what was earned. Okay.
Right. And realistically, again, we're the standard on this is very conservative at a 5 multiple. I mean, this catalog starting at a multiple, it's higher than that. It'll probably be more valuable, and
Yeah, and if you saw in that analysis, I used it. I believe it was 7 times resale multiple, right? Because I mean, something like this, you can sell for more than 5 times. Let's be honest.
Yeah, the point is, you could set those parameters on your own, is what you assume.
Exactly.
It's important to do so. Yep.
All right. So a couple quick questions actually here. How do you estimate the decay rate?
So right now, to estimate the decay rate in the model, we just use it based on how old it is, right? This is a 20-year-old catalog, so that's going to fall in our, the growth rate is going to decay at 30 or 25% a year, right? So if it's 10%, it's going to go down to 7.5%, 25% of 7.5, so on and so forth on the way down. If it's something that's, 3 years old, it's going to decay at like 60%, right? So it all depends on the age of the catalog.
Okay.
It's all a formula that that we've used for the last couple of years, and it's very mechanical. It's designed to be a blunt instrument, again, for context about the catalog compared to other catalogs more than anything else. The raw data has always been available and is there for you to be able to download and analyze and come up with your own decisions about what it's valued at.
I like to call it a sort of center line. It's a place to start, and it's a
Right.
common place to
Correct.
start
Yep.
across all catalogs. And then you're able to, and using that starting place, you can then adjust to either side of that center line based on your own assumptions. But at least it gives you a place that you can begin to, I guess, make those assumptions, or at least compare assumptions against something other than just emptiness. Okay,
Exactly
so
right. Yeah, that's exactly the point. It's for context. I mean, we think that the market functions well when there's more information. So by having a theoretical IRR that is a mechanical calculation that is used in all of the other auctions as well, it gives you context outside of this single auction, about this auction, right? And then you can download the raw data and analyze it thoroughly from there.
Are those decay assumptions posted anywhere? According to the assumptions according to dollar rates that you just went over, Ryan, is that anything that people can access?
I don't believe they're posted on the website.
It should be. Let's do it.
Yeah.
I'm actually jotting that down right now.
Perfect.
Yeah, I mean, everything, all of this is meant to be public. So if it's not, we should make it so that it is. We also,
And
it's not, this is my fault for not putting it up yet.
And just to clarify how those works, right? This catalog was easy, right? It's a 20-year-old catalog. I think the youngest song is 13 years, right? So essentially we cohort every song in every catalog, right? So you'll have 8 different cohorts essentially, but they're age groups for each catalog, vary if they have songs that are that old. So 0 to 1 is going to be one age group, 1 to 2 age groups, 3 to 4, so on and so forth. And each song in the catalog, depending on how old it is, will be thrown in that age group. And then each cohort will have its own decay rate. And again, we'll post those on the website, but that's how it works, right? It's not the overall dollar age of the catalog that gets the decay rate. It's the individual groups within the catalog that get the decay rate.
Right. And essentially it's all based upon this heuristic we've talked about a lot, which is that with the dollar age, that the older the catalog is, the longer track record it has of earnings, the less likely those earnings are to decline. And so we basically handicap less older catalogs in this, mechanical model.
Right. This is a few more questions on this. When will platforms like TikTok show up in the raw data tab? My guess is it already is, but it's under probably a broader headline than TikTok, right? Like streaming in general, something like that.
Yeah, it's most likely going to be that. I haven't seen TikTok in the raw data yet. Like the individual name, they may be grouping it under something else. I mean, that's hard.
Yeah, because there's so many services. I mean, TikTok's the one that's got a lot of attention, but there's so many services, the use of which would fall under one broader category than each individual service would. They're not going to list them by service name. So, for instance, you don't see Spotify or Apple or Pandora by name. You see the type of license use that creates. Okay.
In some cases, you can see that level of detail, but I just think when the newer ones, before they become a big enough piece of revenue, they don't separate them out. But I think TikTok certainly is at that point where it should be significant enough. Getting close to it.
I mean, we'll say even with YouTube in the beginning, there was a kind of I don't want to call it a licensing issue, but they had a hard time tracking down, right, and paying for those YouTube royalties. And now we're actually seeing a lot of those kind of past payments filter through. But that's a good question. I'm certainly going to keep my eye out for TikTok.
Let's dig into that one. Let's make a note of that and dig into that too, and see if we have seen it anywhere in any of our data yet at all.
Yeah, well, I think TikTok just is either in the midst of or just recently worked out direct deals with a lot of the major publishers. The last I think I saw it was a few months ago. So if that happened, then we'd be looking at first quarter of 2020, which would be paid likely either in June or September.
Okay, and just a chat came in, and I thought I was able to make sure everyone could see this, but apparently not. But anyway, a panelist here says that, attendee here says that TikTok payments are not transparent where they do show up, and it is rather small when they do, but the idea is that it's the halo effect. A song's performance on TikTok is valuable on other traditional digital service providers. So that's an interesting comment. Got a lot more questions here. I want to kind of rapid fire through here if we can, because they're all pretty, I think, simple answers. How do you determine the terminal multiple?
So I mean, the way we look at it in the systematic way, it's just a 5-time resale multiple. I mean, when I look at the terminal multiple, it's usually, it's harder to do, right? Because I mean, you're forecasting it out. But I mean, the older the song, the higher, or the older the catalog, the higher the multiple you're going to get. Like, right, with something that's over 8 years old, you can usually, rule of thumb, resell it for what you bought it for, right?
Yeah, here's the
It's
thing.
life of rights.
You can think about it in terms of yield, right? So if at the end of 10 years, this asset, if it is sold at a 5 times multiple, that means it's generating 20% yield. So if it's generating 20% yield annually, like people would probably pay more for it. They'd probably pay more like 7 or 8, frankly, if the economic environment is all like it is today, and that yield would get pushed down. So if you just think about it in terms of, what would someone reasonably pay for that income stream at that point? What would you pay for an income? Would you pay 5 times what an asset is earning to earn that in the future? Probably. Most people would, if it has a long track record of earning.
Yeah, and just like in the example I gave, right, the minus 10%, if it's declining 10% a year, 5 is probably a good multiple. If it's increasing 10%, you're going to get more for it, right?
Yeah, if it's increasing 10%, a lot more. Yeah.
And and just to clarify, the question came in. Yes, the assumptions are basically completely standardized, correct?
Correct. Yes.
All right.
The assumptions for the theoretical IRR.
Yes.
Yes.
Okay. Why do some catalogs have forecasts and others don't?
So because they're not forecasts, because they are theoretical IRRs that are mechanically conducted, essentially, if they don't meet a certain standard, like they don't have 3 years of history, then we don't have enough inputs in order for that mechanical formula to be executed. So if it lacks a couple of the core inputs required, because of the age of the catalog, then there's an NA listed.
And is that generally for the lower dollar age catalogs? Is that generally the thing that will trigger the lack of an IRR or the lack of a forecast?
Correct. Yeah.
Yeah, because you can't base a trend on our trend. The core trend is based upon 3 years. So if we only have 2.5 years or something, it's very difficult. Very difficult to know what the trend is.
There's another question. I'm not sure I fully understand this question, but I'm going to read it and see if this makes sense to you guys. And if not, I may ask for a clarification. But the question is, how do you think about an appropriate discount rate?
Yeah, that's a great question. I mean, you want to look at your other opportunities available, right? That's the easiest way, right? Using the 10-year yield. There is no rate on that essentially, right, at this time. It's what's acceptable to you. I mean, the standard definition is going to be what's your cost of capital, and you want to earn more than that to use your discount rate. Now, a little bit about the IRR. The IRR is the actual discount rate you would use to bring all of those cash flows to equal your purchase price, if that makes sense.
Ryan's a CFA, so if he's talking over anyone else's head besides me, then that.
He's talking over my head.
Yeah. So, Ryan, what would you use? Just you personally on this catalog, on the Misfits catalog, what discount rate would you use?
Right. So for a catalog of this caliber, I like to use between 8 and 10%. That's just my personal standard. I mean, and if you're using something lower than that, that is certainly acceptable, right? It's just you have different, say, circumstances.
Yeah, it's kind of a risk tolerance thing. How much you want to add in there, right?
Mm-hmm. Right, and I like a little room for error in my.
Hey,
conservative guy.
Yeah.
Rob, do you want to inject any sort of we are not investment advisors disclaimer here as our corporate? I just thought that perhaps we might want to just quickly state that this is for educational discussion purposes and so on.
That's exactly right, Anthony. Thank you.
Yeah,
Sorry.
And we certainly, we do think it's important to tell you what our opinions are because it might be helpful to you. But ultimately, any choice you make to buy or sell anything has to be based upon your own individual circumstances. So, like the general opinion that Ryan has coming to the table is different than the opinion I have. Our risk tolerance is different. Our portfolios look different.
Just want to make sure we got that one down. Another quick question. A lot of great questions come in here about how we do this, so I really appreciate it. But here's one that says, for older catalogs over 10 years, do decay rates vary significantly by genre?
For the model, no, it does not. Right? It's systematic. It was essentially to the point where we don't have to look at it. Right? There's no, say, human. There is human once over, but it wouldn't require that. Right? all of the inputs are financial and the output's financial.
Yeah, the only qualitative piece of it really is how old it is. You know, there's not any factor in there for genre. But Ryan, do you think that there's any? Let's say you have a catalog that's over 10 years old, one that's hip hop. Let's say they're both 11 years old. One hip hop, one heavy metal. Is there one that you would think would decay at a greater rate? Do you think that there's one that's worse than the other genre wise?
See, I don't think so. Right. In that example, I don't think so at all.
So
I mean,
the follow-up question here, if I could interject, the follow-up question is, he doesn't mean for the model. He means does an empirical analysis show a different decay rate by genre?
So yes, there would essentially be and again, it depends on that age spectrum you're at, because once you're over a certain age, it doesn't matter. You found your niche market. You're going to keep earning those royalties. Right. I mean, there's kind of some weird nuances with country, right? Those are just on the radio so much longer. And, you know,
and radio plays such a big part of it. And so the radio has its own cycle that's different than other sources. So it really depends upon that. But I will say that when we looked beyond, except for where there was dominant radio influence, we couldn't find any statistically significant difference in genre and the basic performance of them. Okay. Now we're accumulating more and more data all the time. We're renewing the analysis, and if we find something, it's certainly something we would share, because we find it, you know, the more information people have, the better decisions they can make. But
okay,
so far.
So a couple questions here regarding post-auction. I'm going to read them both. One is is there a way to see the financials post-auction as a way to see how well they've aged? And as well as another one that says, have you back tested transactions made through the site to see what the average rate of return has been for investors? So the answer is yes to both, and I'll let you guys sort of jump in there.
So the first one, when catalogs are listed in the secondary market, you can see, so after something is originated on our platform through the auction house, in many cases, most cases, it gets listed in the secondary market. And once listed in the secondary market, you can see what someone paid for it and what its subsequent earnings were since that. So that gives you a history of how things have performed, specific catalogs post-purchase. In terms of how our own analysis of how catalogs are performed and the IRR it's generated, what we did, we administer most of the catalogs at this point. We started about almost 2 years ago now, administering catalogs, and so most of the ones that we administer, we're able to monitor essentially the collection of royalties post-purchase. And for those, in the last analysis we did in the prior 12, which the last analysis I believe we probably did was like 5 months ago.
Yeah, it was at the end.
Yeah. We have another one in the works.
Okay, so at that last point of measurement, the prior 12 months, it was a little over 12% was the average.
Yes. And that doesn't surprise me, right? I mean, that 12% is a very good number for an alternative investment.
Yeah, it's great, but but again, that's the average, and so there were some that were a lot higher, and then there were some that were lower. So just it's an average.
All right. There's 2 more questions here I want to get to regarding your running the walkthrough. Then I want to get to the ones that were left in advance. So just quickly, I'm not sure if it's a question or statement. It says IRR rate is discount rate you use to match price.
Well, yeah. So essentially, I guess it depends how you're asking that. So if in here, so let me just show this real quick, if you don't mind.
Go ahead.
Yep. Just pulling up. Perfect. So essentially, if you take this number here at the bottom and you were to plug it into if you discount these, right, which is just the nominal cash flow divided by 1 plus the discount rate or the IRR to whatever year of the cash flow it is. You look up IRR, it'll give you the formula. But if you plug this 1% into that formula, it's going to equal minus 97,816, right? If you plug 23% into this row right here, again, it's going to equal 97,816.
Okay. And then quickly, how should I factor in the lifetime earnings with the value of the catalog?
It's very tough. And it's not really, that's why normally you would just use a 10-year horizon and then a terminal value. I mean, you could do 20 years and at a terminal value then, but the further out you're trying to forecast cash flows, the more risks you're taking in the data being accurate.
Yeah, and once you get further out, like I just looked at on our 30 years, I just looked at what is the value of $1 at a 10% discount rate in year 31. I believe it came 5 or 6 cents.
Yeah, it's not much.
Right. So yeah.
All right. So there's a question in the Q&A that also matches one that was submitted in advance. So it's a perfect transition point. The question is, are there any third-party data sources that help track trends for a particular song or artist, or to explain why a song may have seen a 50% increase in the first quarter of 2020? So again, just basically third-party data, that helps estimate either future royalties or explain trends that have recently happened and whatnot.
There are services. There's one called Chartmetric, for instance, which provides data on plays and how many playlists a particular song might be on, and it gives you kind of trends within Spotify. How popular music is and what the play count looks like roughly. So you can pick out play trends that way, but it doesn't connect to earnings at all. And so I think that it's important to remember that. So I think the two things you look at to just figure out basic trends are, the catalog in particular, how much of it is actually coming from streaming, which we can, find out the trends around. And if the trend is growing in streaming, it's already dominant and it's growing, then that's a good sign. And then also when you look at these tools like Chartmetric, you can see that it's actually popularity is growing on Spotify. And if that's happening, that's definitely a good thing. And if Spotify and the other music services continue to grow their paid subscriber base, which they are, then that's a good thing. So you have those all those tailwinds sort of going in your favor. Now, being able to look at play counts today and then forecast play counts in the future. I mean, I have talked to a couple of services about trying to build something like Chartmetric to build that, and I feel like that would be a useful tool for them to have with all the data they have. But it's something that's maybe Spotify can forecast, but I just don't think it's just not something that's available right now. And it doesn't tie directly enough to earnings either, which is a problem.
Okay.
And I just want to say you want to add dollar age to that, what Matt just said, right? Because you're going to see an uptrend in a new song, but that uptrend is going to eventually drop significantly. So dollar age plus everything that Matt just said.
Okay. There's actually two questions that have a similar answer. One is, how can we view financial data for closed auctions for model building? And then also the similar question, is there a way that we can make closed auction available in areas sorted by date and price, or close them out in order by date? So first let's answer the question, then I've got a resource for everyone.
Okay. So we used to keep all of the raw financial data up on all the auctions we did. And then a large hedge fund took all the data and built models off of it, and then tried to compete with us. And all their data was built upon this model. And basically, and which worked out, which would, if they succeeded, which would work out works for the artist and for retail investors. So we didn't like that. And so we stopped just spoon feeding them the data they were using for it. You could basically pull it down in every single individual auction. You can do that at the time and build your own. We just want to make it so easy so somebody could go back and do it all at once. But also, we are looking at building essentially a tool that would allow you to view the results of all that data, to basically, through using it, if you know what Tableau is or a service like that, essentially take all the data and allow you to run queries on it. So it's publicly available to everybody. We think that would be okay. We just didn't like, we didn't like it being used for some, hedge fund advantage.
Right. And we do have a link that I'm going to share in the chat that basically it's just an easier way for you guys to find past auctions. It is not sortable by price, or I think you could search by like the name of the specific auction, for instance. And we may update that to account for some better or some additional filtering rather. But for now here, I'm just going to share this link, and this will send you to all closed auctions. I believe that is listed by date currently. And again, the search tab lets you find a specific auction based on the name of the music in the catalog, basically. But that's the resource we have for you right now. So hopefully that helps. I just shared that in the chat link to everyone. Okay, moving on then. What factors, in addition to age of songs and the amount of the royalty, help determine value?
That source is going to be that major one, right?
Source meaning format, like streaming?
Yep. Yeah. Thank you. Yeah. So it's going to be streaming, right? Essentially, it comes down to it. It's going to be streaming. So that's going to be the other major.
If, for instance, if 30% of the revenue were coming from sync in the last, even if it was for the last 3 years, if that had been there for the last 3 years, since sync makes up in reality a tiny percentage of the overall revenue from the income that's generated in the business, it's what is it, 3%, Ryan?
Yeah, 3%.
So it's unlikely that that's going to continue, even though it may have been a reliable source in the past. So I wouldn't want to forecast it being stable, even though it may have been stable. It's probably going to revert to the mean at some point. Whereas streaming is growing, and so understanding that when Ryan says streaming is where it's at, that's where the bold trend is, and that's where, if it's earning in that way, it's just sort of organic. It's got huge tailwinds. It's not the only place that you can get any good income from, but it does have a huge tailwinds in the music space right now.
I saw a really interesting point made in the wake of the IFPI report that came out yesterday. So the IFPI is a global recording music organization, and they put out the report noting the overall recording revenues for 2019, and it noted it was at 20 point something billion, right? Which is almost very close to what the peak was of CD sales back in the late 90s. Yeah. And the point that was made was that peak revenue in the 90s was for one-off CD sales that were just repeating and repeating, whereas now pretty close to the same peak revenue, but it's for streaming, which is more reoccurring revenue than sort of at the whim of the up and downs of individual releases and whatnot. And streaming has a little bit of that too, but still, generally, it's more of a recurring revenue. So I thought that was really interesting. I'd be really interested to see how that forecast is going out. So,
and more than half of the revenue is coming from what's considered back catalog or deep catalog. So things that are a few years old. So almost all of that revenue in the past was essentially going to, a couple of the classic, legendary artists, and then the new releases. And now it's so much more widely dispersed among rights holders. It's a way better situation.
Okay. A couple other questions here. I saw a life of rights auction listed by a seller on the auction sale and not on the secondary market. Can I request some of my life of rights on auction? And I think Rob, you had something you want. I got to get Rob involved in this a little bit more here. He's just kind of standing here. So,
hey, thanks.
Rob, yes, no problem. You had an answer for this question, I believe.
Yeah, and I think it touches on it. If you purchased a life of rights asset, can you then auction that off on the auction platform? And absolutely yes. The mechanism is a little different. You'd have to chat with us about getting a listing agreement and go through that process. But you'd certainly be able to do it via an auction if that's what you wanted to do.
Okay. I'm going to go through a couple of Rob questions now. The Slipknot, there's a question regarding the Slipknot auction, and I think it could be applied to many of our auctions, which is basically that it's too expensive for this individual investor. Is it possible to do in the future to buy like say 5 to 10% of a royalty? We get this question all the time. So Rob.
Yeah. We only do 1-to-1 sales. So that keeps it as a financial asset. If we were to take an interest, split it up into a bunch of different percentages and sell all those at the same time, we'd be getting into securities issues that we do not want to be involved in. That's not to say that an asset that you're buying isn't a sliver of what the seller owns, but we'd only ever do a 1-to-1 sale at one time.
Great. And then, there's another question here. Are larger catalogs more valuable? And by larger, I'm interpreting that as being a greater number of songs.
I don't think so. I mean, I don't think that if you had 100 songs in a catalog or 500 songs in a catalog, but both of them generated, let's say, $100,000 a year, I don't think that one would be more valuable than the other. Ryan, what are your?
Yeah, I mean, I agree. And just kind of using a recent one we did, "Don't Stop the Music" by Rihanna. And I think that one song is more valuable than a lot of catalogs that we've done that are 100 songs.
Yeah,
or, more. So.
Yep.
Okay. There's another question. Where can we find the form of contract for the rights being purchased? Is there a form contract for secondary transactions?
Yeah, actually,
Wow.
yeah, our purchase agreements are posted in our terms of use as links. The samples, you can go in there and check out the language. That's both for term sales and life of rights. As far as secondary, the forms are the same, but they also reference the original transaction so that the chain of title passes from the original artist, songwriter to the secondary purchaser.
As a follow-up, can we send out the links to those two documents to anyone who registered for this call?
Yes, there'll be a follow-up with all of this that I could just send to everyone who was registered for the email. It'll be the video, the links, etc. For sure. Let's see here. There's a question around due diligence. Any advice for first-time bidders in terms of due diligence? And I know, Rob, this is something we've been talking about just recently as well, so it's probably a good time to bring it up.
Rob, yeah, why don't
Sure,
you explain
yeah.
the basics that we do?
Yeah, so the basics that we do are a seller will come to us and look for us to facilitate the sale of their asset. So we'll first do a lien search on the seller themselves to verify that there's no IRS liens, anything that would attach to that asset after the sale. So we'll first do that check. Then we'll go directly to their distributor, so ASCAP, BMI, whoever their publisher is. Check with them to make sure there aren't any account level issues. So something like an advance. Something like child support that the royalties are being garnished. So we'll make sure on that end that the royalties can be transferred and verify all that information. The financials that we get come directly from the distributor. So that's another check. So everything that we're posting as far as the raw data is data that comes directly from the royalty distributor.
And there's a follow-up here, or at least a related question that I thought was interesting. This kind of goes to the raw data file, but I think this also speaks to the due diligence part. Does raw data pull from ISRC codes assigned to each song in a catalog? And before Royalty Exchange lists the catalog on the auction house, do we do a full audit to ensure all sources of royalties are accounted for?
Yeah, I guess so. The question talks about whether we do an audit on all of the different sources. So when I guess if we're working with, let's say, for example, BMI or ASCAP asset, that's all of the sources that the public performance royalties would come from would be their distributor. Same kind of deal with the publisher. The second part of that, sorry, I didn't see that. That might be something Ryan can speak to.
Well, I know that there are times where we've, in our due diligence, in our process of putting up an auction, that we've discovered that the artist that we're working with isn't necessarily collecting everything they might be owed, and we've highlighted this fact to whoever the distributor is to correct. Is that not correct? I mean, just maybe speak that's. I know we do something. I don't know all the details of this, so if you could speak to that a little.
We found a couple different things. Sometimes we found that the artist was actually collecting on works that they shouldn't have been collecting on. Okay, which is disappointing for them, when we find that. But obviously, we discover through the process of just making sure, without validating the catalog, essentially. Sometimes we find things that shouldn't be in there that they really can't be selling. And it's just an error maybe at the distributor level. And also the same for the other side. If we find that there are works that they might not be collecting from, we bring it to their attention. It gets resolved with the distributor, and then before the actual transfer, the auction would take place. So now in terms of ensuring, the actual responsibility around licensing and the collection of royalties, though, that responsibility was before the sale with the distributor, and after the sale, it's with the distributor. So that there's no change in who does that. We don't, other than essentially making sure that the proper works are listed in the catalog, that they belong to that owner has the right to sell them. We don't do anything else. We don't go out and try and see if there's, income that should have been paid by YouTube but hadn't been. We don't do any of that. That responsibility is with the distributor.
There's a question here about consent decrees and the potential consequences of ongoing reviews on the industry. Do you want to address that one, Rob?
Yeah. How much time do you have? So the consent decrees
let's do the summary version, Rob.
All right. So broad strokes. They've been around since 1941. They apply to ASCAP and BMI. Basically, ASCAP and BMI acted as gatekeepers to the music industry. If you wanted to use any music, on your radio station or venue or whatever, you had to go to ASCAP and BMI, and they said, okay, you can have a license to this song, but you got to take all of our songs, so blanket licenses. So that was like de facto price fixing. But it's actually valuable for music users as well to have that. So they entered the consent decrees, which allowed them to be able to issue those blanket licenses. But it also said that ASCAP and BMI had to license the full public performance of a song. They couldn't split out different sources, so you couldn't split for radio out from other types of things. So these are the consent decrees have been reviewed every few years. Really since then they're largely in place. They put a rate court in if you have a dispute with a license fee that they're charged, that ASCAP or BMI is charging, you can take them to rate court. So they've been reviewing a lot of these things. There's been some proposed changes on allowing publishers to go direct to digital streaming services and give licenses there. That could be something that kind of expands the pie a little bit and lets a little more free market work on those types of royalties. There's been a proposal to allow ASCAP and BMI to actually do licenses for mechanicals, which they don't do any of that now. So things could change. I think there's some radical things that have been brought up, like 100% licensing that a lot of people think could throw the industry into chaos, because really the whole industry has been operating under these consent decrees for 80 years now. So what I would expect is maybe a little bit of tweaks to modernize them a little more. And kind of, our thought process is, look, the more transparency and the more information that artists have, the better for obviously artists and the better for our marketplace.
Great. Rob, you're still on deck here with these questions. I'm gonna keep them rolling here. Can we know who the songwriter is for a song we're investing in, if it's different than the musician who recorded the song? And to know the exact date, well, this is an interesting one, to know the exact date of the songwriter's death plus 70 years that the royalties are good for. I'm assuming that's for an artist that has already passed. And how do we get these details before we make a commitment on an auction?
The first question is we don't post the seller's name for privacy concerns. Now, if there is a copyright term consideration, we will post that in the listing. One thing to remember is that copyright, anything written after 1978, the copyright would be the life of the last surviving author of a work plus 70 years. So, if there was 2 or 3 songwriters, even if one of them died and that was our seller, the copyrights would still be good until that last surviving author's death plus 70 years. So that consideration hasn't popped up a ton if we were dealing with a deceased seller and he was the only listed songwriter. Now, what has happened in the past is songs that were before 1978. If someone was written back in the 20s, they might only have 10 or 15 years left on their copyright, and in that case, we'll adjust the length of investment to reflect that.
And so, just to interpret that, that means that before you bid that this is an asset that you will only own for X number of years, so you can adjust your bidding and analysis strategy accordingly, as opposed to assuming it's going to be forever.
Right.
Okay. Couple ones I want to get to here that I thought was interesting. Is there a secondary market if someone wanted to sell their interest in any of our previous private syndicate deals, such as Dire Straits, Cage Elephant, or Eminem?
I wish there were. Unfortunately, just like the securitization thing that Rob addressed earlier, if we were to facilitate that in any way, and we explored it pretty deeply, and we're scared straight by a bunch of a good broker-dealer law firm, that basically just is impractical for us to offer any way for people to be able to trade these, even if we are earning nothing from the trade. So you can resell them after owning them for a year, and it wouldn't be a bad idea if you're interested if you own them and you're interested in selling. It's not a bad idea to let Rob know that. And then that way, if someone asks around, if there's ever saying, if we'd like to buy some more of those, we can put you directly in touch and you could figure it out on your own together. Rob, anything to add to that?
Yeah, that's right. I mean, we just can't even act as a facilitator of the funds
We'd like
can
to,
put,
but we can't.
you're right. We certainly would. Maybe in the future, some sort of white pages where people can contact each other if they know they have interested. But we got to keep our hands off on that for the most part. But again, we have no problems if you're interested in buying or selling to at least contact us, and if we'll keep a ledger of people who are interested, and we can put you guys in contact and let you handle it that way.
All right. Got a couple of foundational questions here that's worth addressing here in the closing minutes. First of all, can we do a quick explanation of what dollar age is?
Yeah. Again, dollar age is just the release of the song. Take today from the release of the song, how much time has passed. So say 5 years times the last 12 months it earned, right? So it simplified view, it's a weighted average of the age of the age of each song in the catalog.
Yeah, so let's say you had 5 songs in a catalog. One of them was 1 year old. One of them was 2 years old. One of them was 3 years old. One was 4 and one was 5. And each song earned $1,000 in the most recent 12 months. Then the dollar age of that, I would think if I did this right, would be 2.5. Because essentially each song is equally contributing to the last 12 months. Now, if instead you had, a catalog where the only ones that were earning income, the only song that was earning income, instead of 1,000 from each song, you had 5,000 come from this song that was 4 years old and 0 from the others, then your dollar age would be 4. So it's just a weighted average of the actual earnings in the most recent 12-month period.
And essentially what the idea is to try to provide a measure of stability of those earnings. The idea being the higher the dollar age, the assumption is the more stable those earnings.
Right, and that's why we don't do the average. The dollar age is not a measure of the average age of the songs in the catalog, which is, I think, is a way it could be misinterpreted. That it's the average age of the songs. No, it's an average age of the earnings,
right,
in the last 12 months.
Right. So, and again, this is another question that asks for best recommendations on how to determine the price or the value of royalties for new artists.
That's all speculation in my mind. And that's why we don't, there's a huge opportunity to be able to provide capital to artists in those positions. I mean, the major labels essentially are all set up as VC investors essentially to fund new acts, and they have lots of resources devoted to it. But there's a lot of speculation, and also there's a lot of capabilities that these labels have to help, market the artists and help them be more successful, at least theoretically. So it's not something that we've looked at, not something that we're interested in historical income.
Mm-hmm. How long does it take to receive revenue from your purchase as an investor? So if you were to buy on Royalty Exchange and acquire an asset, how long until I could begin receiving revenue from that?
Rob, do you want to address that?
Sure. Yeah. The payment schedule is really just tied to what the underlying distributor's schedule is. So we'll list what the next payment date is for that distributor in the listing. And then our accounting agreement gives us 30 days to turn that payment around. I think recently over the last few months, we've trimmed that down to 10 days and maybe even a little quicker than that recently. But it's really whenever the distributor pays plus a couple of weeks.
Okay. A few more questions here. What are the contingencies for the worst case scenarios? For instance, there's some inability to claim the royalties, or for instance, if Royalty Exchange were to go under.
Yeah, that's a fair question. I think that the first issue that could happen would come from some sort of act by the seller that would affect your ability to collect. In that case, you'd have the purchase agreement protects you in that instance, and you have a contract claim against the seller. If their distributor were to fold or sell their catalog, or really essentially a new entity takes the place of the one who's in charge, the purchase agreement is based on the right. So if the right is you've bought the rights to the public performance royalties, you get those rights regardless of who the payer is. So if something were to change, you still have a claim on those royalties regardless of where they come from.
When you say the payer, you mean the one who's just administering the funds, like us?
No, no. In this case,
Okay.
it would be actually like the publisher. So say one of
I
the
see.
publishers goes under, you
Okay.
still have a claim on those royalties, regardless of who the publisher is.
Okay. Thanks for
And
clarifying.
then in the event that royalty exchange would go out of business, that would
Which is
affect.
not going to happen.
That would be the scenario where we would be adminning on your behalf. Our accounting agreement requires us, in the event that we're no longer able to do that, to find a replacement admin or to try to work to get royalties directly accounted to you.
Okay. Couple questions. A
Actually,
little
Rob,
more.
it's not to try to get them directly accounted to them. It's either that we have to find a replacement or we get them directed to them, right?
Right.
Yeah.
Okay. Some broader sort of future-looking questions. Do you expect many royalty payments to be reduced due to the pandemic? And the second part of that question is, please elaborate further about GRP investment qualifications. I don't know if that means group investment or if GRP is an acronym that I'm not familiar with. But I think let's start with the first part of the question, which is related to royalties in the pandemic.
Well, actually, Anthony, you've done some research on this.
Matt, I
and,
think you're muted.
Better.
Yes, you're.
I think you've done some research on this, Anthony, right?
Yes. The simple answer is we don't know yet. I think it's a little too early. But what we're seeing, I guess the other way of saying is that it depends on what royalty we're talking about. Okay. By and large, most of the royalties that come in are related to streaming on-demand services, Spotify's and whatnot. Those at this time don't seem to be negatively affected by the pandemic. We have not seen a reduction in overall new subscriber usage. That those numbers are still up. They're up both over the quarter, prior quarter. It's up over year of year. Monthly, average revenues is I think up. All signs are pointing upwards in that respect. But again, it's still probably a little too early to really get a full understanding of that. Now, there are certain sections of royalties that are going to be affected. For instance, royalties paid by like venues, restaurants, bars, things like that. They're not open. Most of them pay, I believe, on an annualized level. So I think they've already paid, but they're asking not to have to pay their next installment because of the hardships and things like that. So there might be a little bit of downfall from that. There'll also be a downfall from things like live music. A concert venue, like if you go see a band live at like an amphitheater or something like that, they do pay performance royalties as well. We did an analysis of the royalties that we administer to the people that have bought royalties on our platform, and found that both of those outlets basically contribute less than 1% to the performance royalties that have been acquired on our platform. That's 1% each. So it's not a huge impact, but again, we're still kind of seeing where these things pan out. I mean, you can make an argument that any shortfall in performance royalties coming from venues or live events might be made up for an increase in streaming from home. I mean, it's just we don't have all the data yet. It's still far too early. But as of right now, it doesn't seem to be overly significant, at least in terms of the royalties that you acquire through royalty exchange. Live music is the one that's been most affected, and that's not anything that we really have any kind of involvement with.
But as we get more information, we will certainly make sure it's communicated to people as we get it. Everything we have right now, it's the conservative answer. The proper answer is it's really too soon to tell.
Right. Like we did a report for all access investors last month that looked at it, and I'll be summarizing some of that for this month for everyone to be able to access. And then in our marketplace update emails, I am regularly posting news articles that is, it's like the latest data is available through that. And then that's all I do is find that and link to them, so we all have all the same information at the same time. All right, I know we're over, but I want to try to get one more question in if I can. In the current catalog up, the Ev Investments catalog, investor noticed that it does not include Sound Exchange royalties. Does Royalty Exchange have any view on royalties distributed by Sound Exchange? Are there any issues with distribution? Is it more risky, or did the seller not own? Basically, why? I think that's an easy answer.
Yeah. No, we don't look at Sound Exchange catalogs for a couple of reasons. One is they just don't allow an irrevocable assignment. That goes back to the 98 DMCA law that kind of created those types of royalties. They're pretty niche. They apply really to Pandora non-interactive royalties and Sirius XM. and they're also paid directly to an artist, rather than going through a label, like in the Evanescence's case.
Yeah.
And how are we doing on time, guys? Do we want to try to get through these last few questions?
Sure.
Okay. Long-term global streaming revenue will be linked to the number of paying subscribers rather than the number of songs streamed, correct? When do you think global streaming revenue will peak? Let me just quickly address the first part of that question. So the point is that if Spotify has 10 million subscribers, they have more than that. If they have 10 million subscribers, all those subscribers pay the same amount every month, whether they listen to one song or whether they listen to 20 songs or 200 songs. Okay, the pool of money is the same. That money is distributed to the artists streamed during that month on a percentage basis. So yes, if people stream fewer artists, it doesn't cut down on the overall amount of streaming revenue paid. In fact, if anything, the more people stream, the less per stream an individual artist might get, depending on how much they were streamed. It's a complicated.
Right. It's a market share thing, and so that's why whenever you look at pay per stream numbers, it's a snapshot in time.
It's kind of meaningless.
Yeah, it really is meaningless. So when will it peak? I mean, I don't know when it'll peak. I do know that there's a Goldman Sachs report they put out a few years ago that actually has been pretty good.
Spot on.
They've actually had to increase they had to upgrade their view of the market a couple of times. But I believe in that report, they counted on growth through 2030 is what I remember seeing in that.
Mm-hmm.
So 7%.
Okay, so that's what they said. Now, the other thing I think is really important to understand is it's that the streaming services like Spotify, have been a huge boon for the music business so far. But what's interesting now, as compared to maybe when Spotify was just starting out, is that the labels and publishers are a lot more open to innovation and sort of unusual licensing than they were at the start of streaming. And so, things like TikTok can come up out of nowhere and actually have a big impact over time. Things like licensing music within gaming, which is a huge category growing, can be a huge thing that comes in over time. So I think that the fact that the rights holders represented by independents, as well as, of course, the major labels and publishers are very open to finding, to connecting media and entertainment and technology and making sure that music is broadly licensed as possible. So I think that there will be revenue streams that are significant in 2030 that we don't even know about right now.
And I think it's also worth noting that there's still, just going back to the actual streaming services themselves, they're still expanding into new markets. I mean, I think maybe 3 weeks ago, Apple announced 52 new huge, volume markets. But the point is, there's still a lot of greenfield there, basically. So I think that was the extent of that question. Let's see here. Have we made any changes to our due diligence processes, Rob, after any complaints that might have come in from other investors not knowing what they were getting into?
Yeah, I can respond to that question directly, I guess, as much as I can, and just say, we settled that action that he was referencing without royalty exchange.
Let's be clear, because Anthony was hedging on the question. The question was, a royalty exchange got sued by one investor at one point, and the question was, have we changed what we've done since then? And so then Rob, why don't you go ahead and give some color on what the situation was and what has been done?
Yeah. So the situation was, we had a seller who claimed that they owned the rights to a specific rapper, his sound recording royalties, and was able to sell those. There was a dispute between the seller and the rapper itself. We found out about this after the sale. After contacting all of the different royalty distributors involved, the buyer was not pleased and went straight to a lawsuit. Ultimately, and what we can say about the lawsuit is that Royalty Exchange ultimately admitted no fault with that and had to not pay any funds out of pocket. So, that's really as much as I can say on that.
We were just included in it, and we probably should not have been, but that's the way these things work. And ultimately, what the big thing with these is that when the income is not passing through at one of these major distributors, a major label, a major publisher, ASCAP or BMI, then there's inherently much more risk associated with them. I think that's the fundamental issue, and that was the case in that case. And I think that we have, and that was 2 years ago, I think, Rob, something like that, maybe more than 2 years ago.
3, I think.
3, yeah. So we realized this a long time ago, and it made changes so that those are essentially avoided altogether on a platform.
And then lastly, how do you source the auctions for the platform? Gary's not here, but still.
He's not here today. Well, artists come to us every day. We've done more transactions than any other single entity. More than 800 individual transactions. We have a large body of work, and so when artists are looking for ways to generate income, and they really are more honestly than ever, I think right now, because of live income, which is a huge source for performing artists, is just totally shut off. They find themselves in a really bad situation right now, to be honest. I mean, it's really tough for artists at this point. And so we're happy to be part of the solution for them in that. And most of them just find us through word of mouth, or they find us if they, through Google, or asking their manager or their business manager.
All right. Well, those are all the questions we had for this session. Thanks, everybody. There will be an email to you all with the recording of the entire. Oh, yes, Matt.
One more thing. Yes, because we did say in the email announcement for this that we were going to talk about bidding strategies, and there's only really. So I want to make sure we do talk, at least address this quickly.
Okay.
And that is, there's one big change that we made to our platform recently that is important, and that is that there's a buyer fee as part of any transaction, as part of the auctions on the platform. So if you win an auction, you have to pay 1% of the transaction as a fee, or $500, whichever is greater. And now that is true, except for in one of two situations. And the old one was, if you're an all access member, you don't pay any of those buyer fees ever. Okay. And that's been that long-standing for a while. That's always been that way. The second one, and this is the new policy, is that if you make the opening bid in an auction, then you do not have to pay that fee. And if you're an all access member and you make the opening bid, you actually get a rebate of that 1% or $500 after the conclusion of the transaction. So there's a strong incentive to place the opening bid. If you're really interested in auction, it makes sense to place the opening bid. It substantially increases your ROI on the asset.
Yeah, and just to be clear, those fees cover the cost of it. It's a one-time fee that covers the cost of administering the ongoing royalty payments for as long as you own it.
And just all the due diligence and all the effort we have to do to get these auctions listed on the platform. So.
Okay. There you go. Just want to explain what it was there for. So that's it for this one. Like I said, thank you all very much. There will be an email with a link to the entire recording, as well as the link to the closed auction section of the site that I shared via the chat, so that people on the phone will also be able to access it. If you have any other questions, feel free to let us know at investors@royaltyexchange.com. You're welcome. For those that just said thank you through the platforms, appreciate it. And we will see you all soon. Thanks very much.
Take care.
Thank you. Have a great day.
Thanks, guys.